Happy Thanksgiving, everyone. Hope you're all stuffed with turkey and all the fixins.
You too.
Yeah, gotta love the holidays.
Absolutely.
But even with all the festivities and family time, we can't totally ignore what's going on with the economy.
Right. Especially with the Fed getting ready to decide on interest rates again. Always got to be on top of that.
Yeah, so today we're going to do a deep dive into the latest economic data and see what it might mean for the Fed's next move. We'll look at inflation, job numbers, and what the experts are saying.
Sounds good to me.
So by the end of this, you should have a pretty good idea of where the economy might be headed and what to watch for in the coming weeks.
Definitely things everyone should be keeping an eye on. Can't just ignore it.
No, you can't. All right, so let's kick things off with inflation. The October core PCE index, the one that excludes food and energy prices.
Right, the one the Fed really likes to focus on.
Exactly, because it gives them a more stable look at price trends. Well, it came in at 0.3% month over month and 2.8% year over year.
Okay, so basically flat for the past couple of months. Going sideways, I think I heard someone call it.
Yeah, kind of. So the question is, does this mean the progress on slowing inflation is stalling out?
That's the big question, right? The Fed doesn't want to cut rates too soon and then see inflation jump right back up.
Like a yo-yo, up, down, and nobody knows what to expect.
Nobody wants that. They got to be sure whatever they do is backed up by the data and doesn't make things worse.
Yeah, true. So apart from inflation, what other data points is the Fed going to be looking at in the next few weeks?
Oh, there's a whole bunch of stuff coming out. The ISM Services PMI is a big one. It tracks activity in the services sector, which is a big chunk of the economy.
Right, so it tells us if businesses are growing or shrinking.
Exactly. And then there are the jobless claims, both initial and continuing claims.
So those are the ones that show us what's happening in the job market.
Yep. Are more people filing for unemployment? Are they staying unemployed longer? Important stuff.
Oh, and of course the jobs report for December. Non-farm payrolls, unemployment rate, average wages, all that.
All the good stuff. Plus, the labor force participation rate. How many people are actually out there looking for work?
And we can't forget consumer sentiment. How are people feeling about the economy?
It all paints a picture, right?
Okay, so that's a lot to digest. But just to be clear, you mentioned the ISM Services PMI. How would the Fed actually use that data to decide on interest rates?
Let's say the PMI comes in way lower than expected, like businesses are really slowing down.
Okay, so that would suggest the economy is weakening.
Right, and that might make the Fed lean towards cutting rates to try and stimulate growth.
But if the PMI is strong?
Well, if it shows a lot of economic activity, then the Fed might feel more comfortable holding steady on rates or even raising them to keep inflation under control.
Gotcha, so it's all connected.
Everything's connected. Now, with all that data coming out, what's the market thinking about a rate cut?
Yeah, what are people saying?
Well, it seems like the market has already priced in a 25 basis point cut. Basically, investors are already expecting it, so it won't be a big shock.
So why should we even care what Fed Chair Powell says if everyone already knows what's coming?
Not so fast. Even if the market has an idea, Powell's forward-looking statements, what he says about the future, can still really impact bond yields. You know how those interest rates on bonds move up and down?
Right, yeah.
His words could either confirm the market's expectations and keep things stable, or throw a curveball and send things haywire. And that, of course, can indirectly affect the stock market, too.
Gotcha. So it's like a game of chicken between the market and the Fed.
Kinda, yeah. The market tries to guess the Fed's move, and Powell's statements can either say, yep, you got it right, or nope, think again.
Makes sense.
Oh, and another thing to remember, even with stocks going down a bit lately, valuations are still pretty high.
So it's not like everything's on sale.
Not really, so it's a good time to think about how much risk you're comfortable with.
So we've got mixed signals on inflation, a bunch of economic data coming out that could swing the Fed's decision, and a market that's expecting a rate cut but still looks a bit pricey. What's our listener who's probably trying to make sense of all this? What should they be doing?
Well, one smart move is to book profits when you can, especially in a market like this. Having cash on hand gives you the flexibility to buy when the market dips.
Yeah, got to be ready to snag those deals.
Exactly, like waiting for the Black Friday sales, but for stocks.
Perfect analogy.
So pay attention to these economic numbers. They can really give you some clues about where things are headed.
This has been a really insightful deep dive, especially on Thanksgiving. Hope you all enjoyed it and got something out of it.
Absolutely, and who knows, maybe these insights will help you make some savvy financial decisions.
And hey, before we wrap up, don't forget to like and subscribe. Helps us get the word out.
Yeah, we really appreciate it.
We'll be back soon with more deep dives on the stuff that matters most.
Until next time,
Happy Thanksgiving, everyone.
enjoy the rest of your holiday.